No matter what stage of business you are at, it is always important to ensure you are on a good foundation so you can ultimately use that business to generate wealth, a pension, and ultimately for estate planning purposes. On this episode of the Tax Talk podcast, we are going to dive into how to build that strong foundation for your business, looking at the first kind of key part of the planning process and laying out those foundational steps that every business owner should be taking. Let's go. Welcome to episode 42 of the Tax Talk podcast. We're going to be doing a mini series here where we look into some of the key aspects of the planning process. Up first, like we mentioned in the intro, looking at the foundational aspects of your business. How are you putting in place the key elements to ensure that your business is there to ultimately provide wealth planning, pension planning, and estate planning options for you down the road? So without further ado, let's get right into it. So the 5 major things that we want to be looking at as foundational pillars for any business, and this can apply whether you have just started out or whether you have been in business for a number of years. These 5 items are very important to have a good grasp on and have implemented into your business. So what are those? Cash flow, budgeting, understanding financing, tax compliance, and then the use of the proper professionals within your business. So up first, cash flow. Are you monitoring this on a regular basis? So you've probably heard the statistics and the sayings over and over again. You know, cash is king. The biggest killer of small businesses is cash flow issues. So if you are wanting to ensure that your business is going to have that longevity that you need in order to provide some wealth building opportunities for yourself, you need to ensure that you are monitoring your cash flow. So what does this look like? Typically, I would advise, having a strong bookkeeper on board, whether that's internal or external, and allowing that bookkeeper to just do their jobs, get information into that individual on a timely basis, allow them to keep your records up to date, and rely on some of the reporting that is within most small business accounting software programs now. What you want to be looking for is just some of the red flags that pop up. If you're having issues with inventory, you're having issues, collecting receivables, things of this nature, monitoring these cash flow reports on a regular basis is going to be able to tip you off to some of the areas that you might be seeing some of these pinch points in your business, and allow for you to identify those early and then make the necessary changes to release some of those pinch points within your business to ensure that cash is flowing and you are not getting hamstrung for whatever reason. With that in mind, you need to ensure that you've got a quality bookkeeper. You've always probably heard the phrase too, garbage in, garbage out. If your data records are not reliable, they don't encompass everything that they need to, things aren't getting done in a timely basis, it's going to be very difficult to rely upon the data that bookkeeper is producing for you. So it's important to always have a quality bookkeeper on your team to ensure you're able to source some of those reports on a regular basis. And then lastly, in regards to cash flow, looking at internal and external factors. I know a lot of times business owners, especially in the early going, if they're doing some forecasting, looking at cash flows projected out, they tend to be a bit optimistic as to what they might expect going forward. So it's important to understand all of the internal and external factors that could potentially impact your business. Are you seasonal? Are there going to be longer range issues having employee staffed? Things of this nature you need to kind of take into consideration to ensure that you are painting an accurate picture if you're doing any cash flow forecasting. If you're putting out all these good looking cash flow reports, but they don't rely on strong underlying principles and factors within your business, you are going to be putting yourself in a place where, again, you're not able to rely upon these reports, and you can't make decisions based off of reports that don't have solid data. Up next, and it's a big one that people like to kind of stray away from, and that's budgeting. Why is budgeting important? Well, you've probably heard it for many, many years as well. Without a budget, you tend to kind of spend as the money comes in. There is no, cash reserves. There's no plans for future expansions, things of this nature. So it's important to get a budget in place to make sure you are taking care of your cash in the good times. And then when the leaner times come around, you have then been able to kind of save up some money. You have an idea as to what expenses are, maybe those that can be pulled back a little bit if cash is a little bit tighter. So what does a budget look like? Do you need to have a magnificent Excel spreadsheet put together that tracks every little penny and itemizes things on a daily basis to determine what it is that this budget is doing for you? I would probably disagree. I think, again, you can kind of rely upon some of the information that comes through some of your small business accounting software. Kind of use that as a starting point to be able to build that budget. And you want to ensure that it is a flexible and living document. If you put together a budget, as of today, and then you don't look at that budget again for 6 months, a year, 5 years, it hasn't really done you much good. Obviously, if you've made it 5 years from that point in time, things must be going half decent because the business is still, obviously operating, but you might not be operating with optimal efficiency. You might be missing some opportunities where you could improve upon in the business. So ensuring that you review that budget on a regular basis is going to be an important thing to ensure that the data that you're receiving and the results that are coming in on a regular basis are true and accurate, and that you can make some tweaks to things as you go along. Next one is financing. So this one can be a bit tricky as a small business owner. Typically, when you are getting started, more times than not, you are going to be required to invest some of your own cash to get that business going. So it's important to understand, what are some of those initial cash outlays that you're going to have to be, maybe taking on yourself personally. Maybe you have budgeted for that big piece of equipment that you need to start the business, but have you looked at all of the other kind of incidentals, the rent, the office supplies, utilities, phone, all these little things, they'll add up, and, it can be difficult to obtain credit as a new business owner through, say, your corporation, because it is a new legal entity. So it's important to understand, the all-encompassing amount of expenses and outlays that you're going to have to put out there to ensure you're properly prepared and you're not going to get yourself into a pinch, 6 months down the road when things are maybe a little bit slow to get going and you've invested more money than you anticipated, and then you've kind of left yourself out to dry. And then beyond that, once you get to the point where you are able to have some credit extended to your business, always be wary of the fact that the majority of banks and loans that go out to small businesses are going to require some sort of personal guarantee. This, in effect, ties you personally into that corporate debt. And say, for instance, the corporation shuts down or it defaults on those loan payments, you're going to be held personally responsible for paying off that loan. So be aware of these types of things. If you're looking to, get a new mortgage to buy a house, you may not want to go and sign a very large personal guarantee in your corporation right before looking for that personal mortgage, because it's going to impact your overall ability to access credit on the personal side as well. And then lastly, sometimes friends and family can be an option to receive some lending at various stages of the business. And it's important to document the applicable terms that go along with these loans. You obviously want to protect these relationships as best as possible. So having a clear understanding as to, the funds coming into your business and the expected repayment terms, along with any interest, is very important to lay out to ensure that you don't have a breakdown between family members as a result of not understanding when these particular loans are to be repaid. Up next is tax compliance. So there's probably two things that I want to touch base on this. One of which is, do you have a system in place that can kind of protect you from an audit? So full-blown audits don't necessarily happen as much as they used to. A lot of CRA work is done remotely now, so they're not doing field visits into our office or out to clients anymore. But CRA does do a lot of letter writing, things of this nature, to inquire about certain items in corporation and personal tax returns. And then they require information to be provided back to them in order to support whatever that expense or claim was that taxpayer deducted. So it is important, again, to have that quality bookkeeper on your team to ensure that what is being posted into your corporate bookkeeping records is accurate, and that you, as the taxpayer, are retaining all of the receipts that would support any of these applicable expenses. If you've got all of these items in place, if CRA comes looking for documents, usually these, replies to processing reviews are quite simple. The documents are readily available. You can get them put together and sent off quite easily, and this usually makes the process go relatively smooth with CRA. And then up next, in regards to compliance, is ensuring, especially on the trust account side of things, so payroll, GST, things of that nature, that you are collecting these amounts from your clients or withholding them from employee payroll payments, and then you are remitting them into CRA on a timely basis. If you are not doing this, you are going to run the risk of huge compliance issues, especially in the payroll department. If you are required to make monthly payroll payments and you start missing these, the penalties and the interest can creep up in a significant hurry. So it is important, especially early on, to establish that footing and ensure that the bookkeeping gets done on time, the applicable amounts and reports are being filed with CRA to ensure you're not digging yourself a hole with respect to tax debt that you can't dig yourself out of. I believe they just dropped the rates on CRA side from 10% down to 9%, still a significant amount of interest to pay on any overdue balances. And you need to always keep in mind that interest and penalties from CRA or Alberta Finance are not tax deductible. So you're essentially taking some money and just throwing it down the drain if you are paying into these particular penalty and interest accounts. So that is an important thing to keep in mind. Lastly, on this episode, I want to talk about the use of professionals. So we have touched on bookkeeping already. It's important to have that professional there that's going to help you with, payroll reporting, GST filings, compiling that cash flow report, putting together a budget. and just producing the vital data that you need in order to run your business. If you are a trade and you do quotes and you need to track job costs, again, important to have that bookkeeper in place to ensure that you're able to monitor this data to ensure that you're profitable. Up next would be a good accountant. If you are struggling in the finance department, dealing with some of the bigger picture issues, it's important to ensure that you've got a quality accountant in your corner and that you're speaking with him or her on a regular basis. They should be able to provide you with some insight as to, the direction of your business, things that you can do to improve upon efficiencies, ways to minimize tax. And overall, I find that the accountant is kind of the quarterback on your team. And without a good quarterback, it makes it hard to run your business. So ensure you have that accountant on your team that is able to provide you with that guidance. Up next is a good corporate lawyer. This hedges right from the beginning. I find that a lot of people move into a registry's office or they're incorporating online. While a little bit cheaper than going the lawyer route, this typically ends up with things not being set up correctly, which then in turn leads to additional costs or things just not being structured in the most efficient way. So I would advise having a corporate lawyer on your team as well. They're able to provide you with some advice in respect to incorporation, some of those smaller contracts that you might be signing on those early stages of business, and just giving you some overall legal guidance as to protecting yourself and ultimately your business going forward. Up next, a commercial insurance broker, always an important add to your team. Irregardless of what industry you're in, insurance is probably a necessary evil, and it's important to have that in place from a very early opportunity in that business to ensure that you're protected from anything that might creep up unexpectedly. And then lastly, having an investment broker or life insurance advisor. It never hurts to start putting into place some of those building blocks that allow you to do some of that wealth, pension, and estate planning, and having that individual that can advise on the investments and the life insurance side of things early on is going to help you get to the place where you're able to reap the most benefits from the overall business. So that is kind of the episode in a wrap. To me, those are the 5 most important things that are going to enable you to build a strong foundation in your business to not only be successful in the early going, but to see that longevity over numerous years that's going to allow you to start building wealth, a pension, and an estate plan via your business. And to me, that should be the goal of every business owner. You're not just waking up and going to work for the sake of going to work. You're there to build an asset that's going to provide for you and your family long term. So take those steps early on to build that solid foundation, and you're going to be happy that you did that when you get further down the road. If you want to talk more about this specific episode or more about the planning process in general, feel free to reach out to me, Jared Pallon with Legacy Accounting. I can be reached at the Red Deer office at 403-343-7707. Once again, thank you for tuning in. Hope you enjoyed this episode of the Tax Talk Podcast. As always, Jared Pallon, your host. Take care, and we will talk again soon.